All right, guys, welcome back. Let's see what happened in the stock market today. Look at some charts, try to analyze what these charts are telling us for what's coming in the future. So, in general, the market's been bullish the last couple of days. There's no denying that. And we just have to understand that. However, what are we seeing today that changes the picture a little bit? The bears basically won the battle today. Let's just put it that way. So bulls won the battle yesterday. Today the bears won. Here's why. Nasdaq futures. So here's your resistance right here on Nasdaq futures. 94, 96, 94, 95, somewhere right in there. And they popped those. They were running higher. Everything looked bullish. And then all of a sudden some news event came out about something and whatnot. Doesn't matter what the news event was. The point is they popped it. It was a false breakout and then sold off and closed well below resistance. So bearish because of the false breakout and the recapture. Kind of like what you saw back here. You had the false breakout. They then sold it off, recaptured, and then the futures sold off. So that's what we see on the futures. Nasdaq. So the daily picture shows this a little more clear. And I've got these two levels marked out. One right here at 229.51 and another one right here at the gap, 230.22. If I take this one away, this is basically the gap, and because this is where it closed on that day. So here's your gap, the big gap we've been watching for a while. And look what happened today. There's your gap right there at 230. We'll call it 230.20. They overshot that gap, started to run higher. See the tail right there? We're running higher. At that moment in time, everything was bullish. I mean, I was looking at the chart and I could not make a bearish argument, at least for today. It was kind of a repeat of yesterday. I was going to let everyone know that, again, another bullish day. That's two bullish days on top of each other, building a little bit of momentum, and there just wasn't anything bearish. But again, you have to realize we are at a major inflection point, which is this gap. So they're not going to just pop the gap and run higher, and they're also probably not going to run up and just tag the gap and drop lower. No, what they're going to do is chop around and fake everybody out before, so that no one knows what the real move is or the next big move. And so that's what they did today. You can see ran it higher, but then at the end of the day closed back below the gap at 230.30. See, we closed at 229.99, back below the gap, and that held as resistance. So that is bearish for today. So again, this gap is still in play, and this gap might be holding as kind of the top of this rally. It's completely possible that we are at the top of this rally. Doesn't mean it has to be, but I personally think that this is what it is. I think we are at the top of the rally. And yes, we've been in an upward price channel the last, since April, basically. We've been in an upward price channel, but when you're at the top of a potential rally, I mean, price channels don't last forever. So yeah, still intact today. If you're long, it's not necessarily a reason to sell, or not even a reason to get short, essentially. You can wait for the breakdown of this price channel. But again, I don't think you're going to get a clean, clear opportunity to get out of a long trade without losing some ground there. Because I think what they're going to do is they're going to gap it lower, just like they gapped it higher on this rally. If I zoom out, I'll show you how they did it right here. See, this day, everything's bearish at this moment in time for the most part, and then the following day, big old gap, 1,000 point in the Dow gap, and they trapped all this bearish money right there. So that's how they do it when they do a trend reversal oftentimes. So maybe we get something like that where they gap it below the upward price channel, and that would be your sell signal. So you'd want to definitely get out if you were long at that point in time, as long as it holds, I suppose, on a daily chart. They could gap it lower and then recover the price channel. But again, I suspect the way they're going to do it to trap the bullish money is with a gap down. So I'm continuing to look for that. We don't have it yet, but I just want to point out that we failed the gap right, we failed resistance right here. We overshot it and then failed. And so far, this is holding as resistance. It's held, for the last few days. So that's what I see on that. Looking at the hourly chart here, you can see that, zooming out, there's your gap right there. And they basically overshot the gap and came down and closed just below the gap right there. So we'll have to see what plays out, whether that actually is going to hold or if this was just a back test of support. It's still open for interpretation, so I'm not going to read too much into it. But I think that, in general today, the Bears won. So, and I mean, they didn't win a lot in terms of price gains, but they reversed all the bullish gains that we had. So that's all that you got to understand. Let's look at the SPY here. What happened in the SPY? Again, here's the weekly chart. I like to look at the weekly on the SPY because this is the stock market. And look, you got the 200-day on the SPY weekly sitting there at about 299.60. And we're above it so far in the week, but we have tomorrow. We've got one day. So if tomorrow there's a gap down and maybe a big sell-off or some sort of a sell-off that comes tomorrow, we could potentially close the weekly below the 200-day moving average, and that sets us up for a false breakout above the 200. I want to point this out. You can get these false breakouts. Look what happened right here. When you're right around the 200-day moving average, again, they're not going to just stop right on the 200-day and then just sell off. They're going to do some stop rates, or they're going to fake people out. So that's exactly what you saw back here. Look, they popped the 200-day, still closed the week below the 200-day, even though intra-week they were way up here above it. And then the following week, big down week. Here they closed above the 200-day just slightly, just barely on the weekly, and then that was followed by 2 more weeks of a big sell-off. Here they closed at the 200-day. The next week they popped it intra-week. So, they were up here at some point during the week, but that was followed by, a big sell-off. And each one of these sell-offs, when they popped it, these were 5% drawdowns. Well, so that's what we could have here. We could easily sell off, have some sort of a drawdown, bring us back down, and then we'll have to evaluate what we got going on. But I'm just watching for that. So don't think that just because, the week's not over is the point that I want to make. When the week's over and we get the close on this weekly candle, we can evaluate what we got. But as of right now, there is the potential for this candle to fail back below the 200-day moving average. And I think that's what we get. But again, I'm not certain. XLV. And then going back to the SPY, we also have, it's the same thing that happened on the Qs. Let's look at the daily here. You can see resistance is basically at this 302, it's not exact, but it's basically right here, 303, we'll call it. And we closed right on it. So we closed at 303.07. And so that's basically where, that's either a failure, a false breakout, or it's a back test. It's hard to say. Tomorrow will be very, very revealing. Tomorrow is close of the week and close of the month. So actually we should look at the monthly as well. Okay, so look at the monthly here, and you can see, again, if we close the month back below this 200-day right there, then that is that would be what you would call a kickback rally up to that 200-day moving average. And if we roll out, you can see this is very similar to what we saw in these bear markets. See this bear market right here? This is the Great Recession that they call it. I don't think it was that great of a recession since the Fed kind of stopped it short. But you can see you initially broke down below the 200-day, and then you came back up and tagged the 200-day right here on the monthly. And you closed back below it. After testing the 200-day, you closed the month back below it. And then that was followed by pretty much all selling down 46-50%. So that's kind of where we're at right now. even though everything feels bullish, that can stop short, and you want to keep these monthly candles in your analysis, because if we come up and tag this monthly on the 200-day and fail, or fail to close above it on the monthly candle, or maybe close just marginally above it, then we could easily see more sell-off. So keep that in mind, because that's at this moment in time right here, everything looked bullish in the stock market. Everybody was cheering the rally, and then it stopped short and then was followed by a massive sell-off. So we could easily be there. Don't be complacent, and that's really all I want to say about that. XLV sideways, you had a false breakout. I moved the trend line up to this 102.24. I previously had it down here. We had too many violations of it and I saw today we were moving up above it. So I moved it up to the top of this range where we've had several reactions. And you can see even today they overshot it, but then failed back below it. So that's a false breakout as well. If there's continued down pressure, then that's just another false breakout. Bigger picture, we're sideways. We keep popping the upside. We keep dropping to the downside. No real trend, just a sideways trend. So still looking for the breakdown, 96.77 on an hourly close or a daily close. And that's all I see on that one. XLF. So XLF popped resistance. Here's XLF's resistance, 23.64. We popped above it, came back down, and closed pretty much right at it. 23.68 is where they closed. So we'll have to see if that was a false breakout or if that's a back test. Still need more information on this one. It's undetermined. Okay, XLK, which is a tech sector, just tells you what's going on with tech. And tech's the most important, in this market. You really have to understand where tech's going, because that's going to tell you where pretty much the rest of the market's going to go. And so this is interesting. You've got this gap right here. Top of the gap sitting at 98.85. Bottom of the gap sitting at 96.84. Roughly right in there, 96.70. I'd say we closed today right at the bottom of the gap, 96.75. So here's what I see in XLK. You've got the uptrend, nice, clear, clean uptrend. We broke the uptrend. We've then been back testing, and we're starting to lose momentum. The reason why I say that is look at the rally from the bottom to when we broke. Right there, we broke. That was a 33% rally, and it took a period of 38 days. After we broke that uptrend, we then have continued to backtest and rally up some more, basic 7.5%, and it's taken a period of 27 days. So about a third less of price gains and about the same period of time. So that is momentum is fading, basically. That's how you read that. The other interesting thing as I zoom in on XOK is you can see here's the top of the gap, 98.85, right up here. If I kind of squeeze that out there, 98.85. Now, look, we've tried to fill the gap twice. We tried here, failed. We couldn't quite fill the gap. The seller stepped in and sold. And then we just tried again today, ran up and failed basically at the same point. The seller stepped back in. So 2 missed attempts at filling the gap. And doesn't mean we can't, fill the gap, but that's 2 attempts. So that's bearish. I mean, that's just how you have to read that. So whether that continues, we'll have to see. But again, this is the case that I'm trying to make on technology is momentum is starting to fade. We have negative divergence in the momentum indicators down here, PPO and the RSI. We have 2 missed attempts at filling the gap and, a broken trend line. So that's really it. Moving on. Walmart continues to work for us, just chopping around sideways. The point is we've been in this sideways trading range right here. We already broke to the upside and that failed right here. This is your false breakout. And so because we've already done that, I think now the move is to the downside. So again, we're just looking for this to continue to break. There's not a whole lot more to review. It's just sideways. Apple, same thing as XLK ultimately. No gap, but you've got the all-time highs sitting right up there at 327, 320, 328 basically. That's your all-time highs. We're just hovering right below it. We could pop them. You know, that's completely possible that we pop the all-time highs. But again, same thing. Uptrend. We broke the uptrend. We've been back testing. There's essentially no momentum now that we broke the uptrend. It's just sideways. So we were moving up cleanly. Now we're moving sideways. Microsoft, they closed that right at support. They undercut it, but then ended up closing it right at support, 181.33. So we'll continue to watch that. It's just on support. Tesla sideways. You can see nothing really going on there. Nvidia, this one looks good for a short, and I took this short. Here's why. You've got the Gap Island cluster. If I go to the daily chart, I can point it out. See this cluster of candles right up here? It's separated by a gap up, which is right here, and a gap down, which is right here. The gap down was smaller, but still did gap down. So anybody that traded, to the long side in this cluster is underwater essentially. And what you'll get oftentimes, going to the hourly chart, is you'll get a kickback rally that tries to wash out anybody that took the short position on these clusters. And so that's what I see right here. This is your kickback rally. We basically filled the gap, washed out anybody who maybe took the short right here on the gap down, and then started to roll over. I think we continue to roll over and head south. And that's that's a tech stock, so that should weigh on the tech sector a little bit as well. So this one looks good. I see this 303.30 as kind of the nearest target. Kind of mark that out right there. I think we head down towards there. And that is a drop of about 10%, 10.5%. So we'll watch that. Here's your semiconductors. This is the same thing. You have upward momentum. We broke momentum. And since we broke, here's your breakdown. We have moved almost 7% basically to the upside. But that contrasts with the original rally. Up until the break, we moved 38% over a period of 42 days. And since then, we've only moved basically 7% over a period of 28 days. So a loss of momentum starting to fade. That's really what that means. Still in a sideways uptrend. So no sell signals essentially, but still we're losing momentum. Zoom. Just chopping around within the bearish rising wedge. We took the trade the other day and closed that out for a 12-13% profit. And I'm pretty much done with this one until it wants to break bearish below this trend line. So kind of keeping an eye on that. TVIX. All right, so we had a pop into the close here. Again, it continues to pay when you're buying this thing along the support line. You buy this around the support line, and we're getting these pops in, off of this support line. So this has got to do something soon. It's going to probably either move to the upside if you get the breakdown in this market, or we're going to break this pattern and start to head lower. And that would most likely come with the next leg up in the stock market. So, but until then, this is your support line. You can see it on the hourly chart. All right, let's look at some gold stocks here. Pop this open. All right, here's gold futures. We had a false breakdown yesterday. We recovered that, moving higher. Everything looks bullish still in gold. Here's gold bullion, hourly chart. You can see we had, a false breakdown right here. They recovered that. Came back down and tagged support again, but still looks bullish. So short-term bullish still. And I'm longer-term bullish on gold as well, because longer-term gold is in a bull market. If we go to the weekly, you can clearly see that we're in a nice clean uptrend. So could easily have a pullback, and I think that is setting up for some sort of a pullback in gold. But again, we did recover that support line, so bullish. Here's Barrick Gold. This one I've been kind of eyeballing. We had the pullback yesterday. I was looking for a little bit more of a pullback down to this 22.50 range, and they stopped short and then started to move it up today. So, or yesterday. Today they gapped up and then sold off and filled the gap. So we'll see what tomorrow brings, whether this is going to have a little bit more selling. I'm not really interested in being a buyer until I can get it down around this 2250 range. Or maybe if we can break back above this 25 range, I might be interested. But right here, it's just kind of in a zone where it's just no man's land for me. We're right in the middle of it. We closed right in the middle. And so looking for either lower or higher prices to enter back in. Barrick is in a bull market though, so you've got higher lows, higher lows, higher lows, higher lows and higher highs all the way through. So still bullish long term, but it's all about finding the proper entry points. Newmont Mining, this one just broke down and again broke the uptrend, kind of trading sideways. That's the theme that I'm seeing. Here's a nice clean uptrend in Agnico Eagle, broke or trading sideways. So everything is either taking a rest when it comes to like gold. The miners are either taking a rest, going to consolidate, and probably work their way slightly lower before starting the next uptrend. That's most likely what's happening. All right, that's all I got. I'm going to wrap it up here. Just wanted to point out what I saw. I think there's some interesting developments that happened today. So we're looking for, the big thing is looking for that sign that there's a bull trap. Haven't seen it yet, and we're just kind of waiting for that. I think it's close, but at the same time, we don't have it. So we have to just continue to look at what we do have, and we'll wrap it up there. So thanks, guys. Give me a thumbs up. Appreciate it. Leave a comment. Talk to you guys later. Bye.